Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I'm Joe. I'm here today with
Dan Hussey, Senior Market Strategist with Zaner Ag Hedge.
As almost every day, Dan and I are out here talking about some agricultural market stuff. This week, a little tough. We had kind of a truncated week, shortened week, 1 day short with the Thursday federal and banking holiday, which left me sort of borderline in a coma this morning. Glad to shake that off and get out here to the city and see what exactly is going on, tick by tick, bar by bar, chart by chart, which brings us to the important part of today's podcast. Dan, what are you doing this weekend?
I have been training as of late because I've got my Ironman race this weekend. I actually half Ironman in Rockford. I've done full Ironmans. I've never done a half. So in theory, this should be easier, right? But after a mile swim down the Rock River, we'll bike for 56 miles and then run for a easy half marathon to finish out. I'm hoping to finish around 5 hours and 30 minutes. If I can beat that time, I'm ecstatic.
Yikes, man, that just made me tired just hearing about it.
How about you, Joe? Can you like some R&R for the both of us?
I'm not going to do any of that. I actually, truth be told, I probably will get a good bike ride in if the weather permits, but certainly not swimming or running on top of that. Although in 5 hours, that's a pretty great. That's a pretty good time. So you're gonna knock.
Yeah, that'd be under my half full Ironman time. Like so, my best time's 10 hours and 51 minutes, I think, somewhere in there. I don't know. Half of that, right? Anything in the 5.5 hour mark, I'd be happy.
And you're going to do that with 2 kids.
Yeah, right. Yeah, that's true. I'm a father twice over since then. Yeah, in fact, accomplishment. I haven't done one of these since I had a kid, in fact. So it's been 3 years as a Daniel. We just announced we were pregnant with him.
We trust in our training and get out there and get some luck, get what the day gives you. Isn't that what we say?
It'll be 95 degrees out, so I'm going to trust in my water bottle and
that
nutrition
really
plan
then,
as well.
At 95 degrees, your biggest challenge is going to be eating in the heat
alive
and drinking, and drinking enough to keep you going. All the exertion part will just be secondary.
The bike ride is just a bike ride. I can drink as much as I want, eat as much as I want on it. I mean, yes, we're exerting ourselves, but the truth is there's no limit really to the nutrition I could provide myself on the bike. So it's getting myself 3 hours into a workout with the nutrition ready to complete a half marathon is the idea. And that's what you really train for in one of these events, because the rest of it is just sheer willpower to get to the finish line at the end of the day.
Sounds totally awesome. Sounds like you're going to do great. Got the right mindset going.
Yeah, without the 95 degree heat, I was kind of actually looking forward to it, even though I don't think I'm in as great a shape. But man, this is now going to be a bit of an arduous day for me. So we'll see. It'll be fun. I'll enjoy it. It'll be a struggle, right? Like I worked for it, but man, what a weird segue into markets that also seem to be struggling here into the end of the week. Although a red day, we were just talking about some of the weekly closes, not as bad as it looks.
No, so let's start out with where it is bad. Meal and corn. You open the week,
right?
And I'm looking at D-Stan. All the open interest and volume is in the December contract, and so while that July corn contract today did not look so great, all your open interest and volume is in December. We opened the week at 443. The high was 447. Last trade I saw was the low trade, 433 3/4. Last trade, 441 1/4, down like 1 3/4 on the week. Funds are short about 173,000 contracts. That number caught me by surprise. Stopped short today of that. There's your chart that shows we ran into the 50-day moving average and could not hold either the 10 or the 18-day. Below, bumped into
I got
the 50.
That 18-day here. Obviously, the 10-day would be a little bit off that, but same area on the chart that Joe's referring
below
to.
all of that, right?
Yeah, so right there.
December corn kind of looking okay in relation to the July.
I mean, no news is good news, or all the bad news that can't bring December corn down. And when we say that, right, it's just like good weather, not great for corn prices, right? Wheat prices kind of came off their highs, although it's been a strong wheat week. Bean prices kind of came off their highs. So you're not seeing like corn momentously following through to follow wheat and corn and beans higher. But at the same time, all of them rolling over, we haven't really fallen apart, at least in December corn. It's a different story when we look at July.
Yeah, July looked pretty terrible. But so then you have to enter into the technical debate about the technical merits of following a contract that doesn't have the most open interest and volume in it.
Right. Like, what's the price of real corn right now? Yeah, spot corn in July, but like Joe said, where's the interest? Like, what's the
price discovery is taking place in December. So
absolutely,
I don't know.
Absolutely, and we're so close to only being a 13-cent spread here. That's almost nothing in today's environment between old and new crop. Like, you don't expect July D's corn to be that narrow if you've got one of these, the years going one way or the other. So what I'm suggesting here is, still probably the need to build in that weather premium, which is what you're, I think, seeing. And believe it or not, they're doing it by selling off July. And no, it seems counterintuitive, but that's why December, in my opinion, is still remaining a little better bid here. There's still that option that December corn could go the other way, right? Like, the market's not willing to sell it off below 430 and find a new contract low yet, because we still have that unknown of weather for the next 2.5 months.
And I've got calls, customers have calls overhead that expired today in July. That July corn just did not hold or advance risk premium the way that I thought that this market would. And those options have expired with no value. But this entire time, as the premiums have been eroding in those options and the risk premium has been coming out of July corn, I still can't help but feel, and I say feel with quotation marks, right? I still can't help but feel that risk premium could come rushing back into this market at any time. And it's a function of weather. You've got your rather tight global carryout, rather tight domestic carryout. You seem to have American farmer that if they do have supplies, are not super willing to sell it here. Doesn't seem to be that anybody's super willing to begin selling new crop. And so there's a bit of a stalemate on this chart. And maybe that December is telling us is that, yes, you have favorable weather. A lot of places, we just talked about this before we opened up, a lot of places where you see actual corn growing looks pretty darn good, doesn't it? But yeah, what's the next bearish fundamental?
It's certainly the corn I've got my eyes on and driven past and ridden past in my corridor of Illinois. Small subset of the market, but like, if I'm backdoor trading this crop right now, I'm thinking there's a monster out there. And certainly when you look and you check out some of those problem areas in the Western High Plains in Oklahoma, Kansas, up through, Nebraska, not as much Oklahoma, but the point being is that those drought areas have gotten some relief rain too, right? So I think there's a reason that we didn't see an initial response to some of these drought maps that have crept up and shown drought throughout much of the Western Corn Belt that have now kind of been remediated. Of course, if we look at forecasts here over the next couple of weeks, which I think we've all probably seen to some effect, but just real quick, that maximum temperature forecast, I mean, getting up into the 90s throughout the days. We're starting to get into that dog days of summer type heat in June. Obviously a reason to concern if this continues forward, right? But as of right now, these are going to bring great heat units to a crop that's gotten good precipitation. If the precipitation, the 6 to 10 and 8 to 14 day outlooks with above average rainfall continue, yeah, this is the map that is kind of throwing the wet blanket on the parade for corn. If this rain don't come, but this heat sticks, I think we've got a different story. And you watch this belt from Lake Michigan all the way out through Nebraska to Colorado that has had struggled a little bit this year in terms of rain early. If it doesn't continue to get that moisture, there you go, right? You've got that narrative that we can watch, but we got to watch it develop. And corn as of right now is bottling up, kind of waiting for that moment, in my humble opinion, and unwilling to commit to either direction. At least it's not lower. And that's kind of the saving grace for corn, right? December corn not willing to follow July lower. We're clearly building in some of that premium that into the board. Some of that carry out needs to be built in. And it's going to apparently happen by maybe December to July getting whacked a little bit more and December holding strong.
One pit over in the grain room. November beans opened the week at 10.54 and 3/4. High was 10.74 1/4. Low trade 10.52 1/4. Last trade 10.60 3/4. That was up 6 on the week. Funds are long about 50,000 contracts of beans. High from the 14th of last month was 10.65 1/2. We got out above that today in the November contract, I believe. Didn't stay out above that high, but traded through it convincingly, and we're well above everything else from looking at that chart. Trend line, moving averages.
Moved away from all those moving averages, a little overbought, but that's a good thing. I mean, that's going to be expected as you come out of these conditions. You're now above that downward sloping trend line that we are kind of forming this wedge-like structure on the chart. So now you've just got prior highs to try to go back and tag. I do want to call out this prior low here back from February around the 11 to 16 area. We're still a long ways off from that, but like it's the next really big upward swing level I'm paying attention to because it's the old low that we broke below to start last year through in June and kind of came below, right? And this is just a straight chart of November. So even back then, that was a little less liquid of a contract. But the point is that we're into some kind of old supportive area that has been holding as resistance, and now we're testing it as resistance again in a decent uptrend. Joe, if this resistance chews away and gets gone, that's how we go 1080, 11 and above, right? So we're keeping a close eye on that. Technicals in the short term are starting to turn a little more bullish. We're getting bullish crossovers. The 18 days back above the 200 day. The 100 days trying to get back above the 200 day. The 55 days coming up. So we're going to watch for those golden crossovers as well. Pullbacks, watch for supportive levels to potentially find support on. And we have a pretty big line in the sand here around $10 where, from a swing perspective, we don't want to see beans go below 10 if this is going to be a bigger turn for the market. But in the short term, as Joe said, we closed above and at these prior highs and above the old highs for last week. So week over week, day over day, we've got a little bit of an uptrend going. It's something to watch for.
This chart sort of underscores the bias that near-term price action can give you when you look back at these charts. When I look back at this chart, you say, okay, we've been talking about a bean market that has been remarkably resilient. Maybe the word resilient used in relation to bean futures for months now, right? This is a market that should be falling apart. We should be trading to 950, biggest crop in the history of crops out of South America. And this chart here in the last 4 or 5 days shows that this market was waiting for, quote unquote, the surprise of these renewable fuel numbers, where market was looking for a 5 and the number came out with a 7 on it and caught folks by, quote unquote, surprise, and up we go. And so what you have here, in my opinion, is a chart that says, okay, this is a bit of a game changer. And if you switch over to
this is that first show, this is that first move.
Right. But if looking
confirming
back,
that, hey,
looking back on that, what was the July bean futures chart and now a November bean futures chart, you couldn't really trade lower the way we thought we were going to trade lower. All of a sudden, with this price action in the last 5 days and this announcement about the renewable fuels, you see why we couldn't trade lower. The market was waiting for this or something along these lines. Now, this bean oil chart that you look at here opened the week in, I think it's still July bean oil.
And I don't mean to cut you off, but
go ahead.
At first glance, how beautifully technical is this move becoming too, right? Like it went from really nonsense, I don't want to say nonsense, but a very big range to now starting to break out of it. But let's get those numbers.
But for sure, you're absolutely right. And this is kind of my point. We opened the week at 52.18. High was 55.81, low 52.18. Last trade I saw 54.47. That was up 386 on the week. Funds are long 71,000 contracts. But for sure. So you had been making, ostensibly, traveling a path along this channel here, upward movement, break it back down on disappointment as we're waiting for the numbers. You get some enthusiasm about what could happen. You get some lack of enthusiasm, some disappointment about the fact that the numbers weren't coming. And when you finally get those numbers, bam, all the way up to the top and even out of that upward boundary, right? Yeah. And so the market
Yeah,
is
you
saying,
you
hey,
gotta really get back to a continuous chart to get to prices that bean
absolutely.
oil was even at. It's a and that's something that let's just talk about that idea for a second in futures, right? Like when this contract has only really been liquidly traded here for the last few months. Back when it wasn't as liquid, right? We're now into those uncharted territories. That says something about where this has gone, that we need to start looking back to continuation charts to really figure out how far or where the market could go. And there certainly aren't that many, if any, participants sitting there with old positions at these levels.
Right. And this market is saying, hey, to get to a more equilibrium level, we are having to travel fast, and we may be traveling far. So that's very interesting in terms of, it would seem, and I've seen reference, and this is not an idea that certainly sprouted from my feeble mind, but we may be pricing ourselves out of the bean oil market, right? So you're not going to be exporting as much, but you are going to be
Price
using it
rationing
domestically.
demand so much,
Right.
right?
Right.
Yeah,
And so
you've got to
how much further can we
temper
go
demand.
here?
Mm-hmm.
You're really going to have to
Absolutely.
start using that. You really have to start using those supplies domestically. Do you have a feel, Dan, for what the time frame is on something like that? Do we measure that in months?
That's a really tough one, because here we were sitting a year ago, right, getting the news at conferences, hoping that we would be sitting at probably a year from now with maybe a real roadmap for how it becomes a thing and not just an idea. I think we're obviously getting closer to that with every announcement, right? Where they're buttoning down the hatches in terms of how much, but I don't have a feel for exactly right when that's going to happen, which is kind of an argument to be made where we're probably still years out, maybe 1 or 2 years out from any major change that's going to actually create demand in these markets. And what I fear in these run-ups is like the market will get sobered up by that. But then again, there's people who are closer to it than I do. I mean, what do you think, Joe? I mean, do you think this move is a little too soon, too fast, or do you think it's the market really trying to price it out?
I think it's instructive, and the market's trying to find a level, and so that's going to have to be litigated over the course of months, right? But you're right, and then I have to say that I don't know. But
Yeah.
when you start seeing this product move through the pipeline, and these renewable fuel numbers turn into renewable fuel reality, to me, that's a big
And
deal.
now I would also point out,
Into
look at where price has been, right? Like it's a long ways to go.
For sure. For sure, right? And we certainly are good at growing stuff. And South Americans, your Brazilians and your Argentinians have done a great job. And we're going to do a great job even with limited acres this year. So certainly supply currently adequate. But when we start moving through this stuff, maybe we need a new higher plateau to reach an
Yeah.
equilibrium level. And
Yeah.
who's to say how high that is?
And to Joe's point, right? And that's why I kind of leaving this chart up is like, okay, well, how high does that go? If we get a run up of, from a 25 to $90, right, run up, well, okay, does that take 40 to 90 to 120? Is that where this market should be pricing in this new world? Well, it's not going to get there today. And that's why, yeah, this could take a couple of years to get up to those prices where we're actually pricing bean oil for its demand as fuel. The market's going to be figuring out. And I think you have to look at this bigger picture and say, oh, does that make bean oil a $70 to $140 product, not a $40 to $90 product, right? Like, and that's why Bill and I are trying to hash this out of like, how long is it going to take? Because this is a big deal, right? Like this is a dynamic change in the fundamental demand for this product. It means that fundamentally this whole chart, like everything that went into all the economics that went into figuring out price back in this period, this October 2020 through August of or October 2024 has changed, right? And so now the price action is going to change and price discovery is going to take care of that for us. So the question is, how high can this go based off that new demand? Well, cool. And how long is it going to take to get there and price it in? Yeah, this could be a big thing. And the shorter time frame charts and the daily chart that we were looking at just a moment ago are starting to say that maybe it's getting going and that idea is starting, but it's probably not going to happen in a straight line either. So, be cautious out there.
Other side of the coin, soybean meal opened the week 291.80. high for the week, 291.90, low 282.70, last trade 284.10, down 780. Funds short about 100,000 contracts. With the demand for bean oil rising, the idea that the supplies of meal will continue to be burdensome until we find, like I said, other side of the coin type price action here, until we find an equilibrium price lower here where we can also begin.
Yeah, and this is where I guess like my fundamental understanding of crush demand is lacking, because I don't understand how all of a sudden implementing an energy demand for the oil somehow diminishes the demand for bean meal here. Like, are we going to suddenly be crushing more beans? No, we can't crush more beans. So the amount of crushing and capacity that's going to be going on is the same. Therefore, the demand for, like, we can't magically increase the amount of beans we're crushing to create more oil, is my point. We're going to have to find do with the oil supply we already have, which we're already, right now, we're oversupplied in oil, right? We don't really use it. It's the junk product of the crush until the energy markets came around, right? So, we always crushed for the meal for generations. Now that's changing. I don't understand why meal is under such heavy pressure given that dynamic, because I don't see us crushing more soybeans because we can't. We're at capacity. I mean, I could see capacity going higher, but I don't get this. With the price of cattle, hogs, and everything else, meal demand should stay consistent. If bean crushing is going to stay consistent too, why is the price of bean oil going up mean the price of bean meal have to go down? Which, that's the question, right? I pose here to everyone. And hey, leave us your comment there in the chat here, or shoot us a question that we can answer on air for you as well into that regard. Because why does bean meal have to get heavy here? I don't see why, right? I don't see why.
I think maybe the answer is going to be that you are going to crush more beans, hell or high water. They're going to find the capacity. New capacity is going to come online.
And that's the answer right there, right?
Theoretically, futures markets are telling you about the future, right? And so you're going to need to crush more, and the result of that crush is going to be more meal supply. And if you have more and the demand stays the same, you have to travel lower, you have to trade lower to find that demand at a lower price point. And so this could be, and here again, just like with the upside in bean oil, could be early sledding. Maybe there is more work to be done in terms of sharpening the pencil and saying, okay, here's what's going to go where. I do have a sneaking suspicion that the U.S. will get much better at exporting meal. I think you've seen some signs of that already here in recent flash sales, right? We flashed some meal to an unknown destination. And I would suspect that there's going to be a bit more of that as this price continues to trade lower and gets more competitive on the global stage. We could begin to be a larger exporter of meal. At least that's what you would think on the face of it.
Absolutely.
That's what this lower price is all about. We're simply marketing to the world.
Absolutely,
hey, we have more meal.
Yeah. And actually, in my comments earlier on the cattle, I was thinking through, I was like, well, higher cattle prices, particularly in the feeders, means the odds of a guy putting more cattle on feed and spending that money and then buying the meal too are lower, right? It's an expensive proposition to build a herd right now, even though it's the best thing in the world you could do. If you could magically get more cattle, eat up this cheap meal and corn, oh my gosh, right? But that's not the way that's not the way the real world works. And it's going to take time for the market to price in that. And certainly, right, that's what we're seeing now. We're seeing the market trying to find where's the demand for corn, where's the demand for meal, and how high can cattle prices go is the moral of the story. And maybe until today.
Yeah, cattle on feed report today in the face of weakness in both feeders and fats. I saw a note, I don't know if it was ADM that was trafficking in this nugget of disgusting information, but apparently the screwworm, they can eat an animal from the inside out in 10 days.
We got new nightmares unlocked.
Yeah, how about that, right? 10 days, right?
Seen this movie. I know how it ends.
Right. And so in the face of that, you still had some weakness. Right, exactly. August cattle opened the week 213.17.5. High was 216.05. Low trade 209.37.5. Last trade 209.82.5. Down 265 on the week. In August, fat cattle
way
with
lower. Yikes.
with a bit of a cattle on feed here this afternoon. My question is, where is the new fundamental in terms of, okay, we got a bunch more animals in these categories that are going to make a difference sometime soon. I have a hard time thinking about where those animals are coming from. Mexican borders closed. Maybe they're launching them across the border from Canada. I find that hard to believe as well. But a little bit of weakness here in a non-delivery month for cattle, I think, right? And end of quarter coming up, end of month coming up, a lot of stuff at play here. Ultimately, I wonder if cattle prices can be restrained or if we're going to get some new highs. How about feeders? We'll knock that out real quick. Open the week 308.12.5. High was 310.90. Low 301.10. Last trade 302.45. Down 397.5 for the week. Couple weeks of price weakness, a bit of a correction here in both feeders and fats. What do you say to that?
I see what I would refer to as kind of a failed auction theory. And this is not in reference to an actual like cattle auction or anything. This is in reference to price discovery. The idea here on feeders is like I've highlighted a couple highs, here on the way up. And, we've taken out those prior highs. And the idea is that, okay, if you're going to be continuing a trend higher, you're going to establish price above and continue higher. Well, there's a great example of that. Here's a price auction, right? We ran up 295. Got too expensive. The market discovered and auctioned it off. We found out where the bidder was. The bidder bought it up again. We got up to the old highs where the buyer stopped before, and he kept on buying. And then he bid it all the way up to 310. Then the buyer stopped and ran out, and the auctioneer took it back down. They auctioned it off. It went back down, found out where the old buyer took place and bid it back up. And then the problem here is that once we got up above that old high, we didn't really stay there. In fact, we're starting to come back down and the auction is kind of reversing. The idea is that we're not carrying through on the momentum. We're now falling below some other technical indicators like that 18-day. Like we said on the fat cattle there on a hot second, it was an outside day lower, failing to get above that 18-day. It doesn't look good. After a cattle on feed report coming in next week, this could get fairly heavy just on technical selling at this point. And, in terms of the auction we talked about there in feeders, well, now we're auctioning it off and we're going to find out where that buyer is. The next big level to the downside is where we got bid back up from around the 295 area. And below that is probably down around 280. So we'll see what happens, but it's my humble opinion that we might be forming a little bit of a top. This week's close seemed pretty indicative back below some levels, like closing below the 18-day, trying to get back above and failing to, and closing back below. These things are, to me, signs of a top potentially forming. And I'm very curious to see now into next week and the week after how far down the rabbit hole this market could go.
And certainly, as we have seen in the past, it doesn't take a lot for the algos and the $300 tie wearing set from New York to press this market around. The bulk,
right.
If not the bulk, a big part of the trading participation in this cattle market these days is algos and expensive tie wearing mofos from New York.
Absolutely. And notice we made a distinction, and we made a distinction there that when we made up and ran into these highs, it's not because a big seller came in and sold it. It's because we ran out of buyers. And that's why we've started to reverse, and all you have is people selling and not taking profit. And the first guys that are going to run away and be the selling pressure are those, $300 tie dollar wearing hedge fund managers who just want to lock in and take their profits. So, the speculative position that is long the cattle market is probably going to be tested here and potentially punted to get taken out. And we're going to go down to find out where that commercial buyer really is. So pay attention, folks.
And the $1 million question
is happening.
The $1 million question comes back to the cash market, the box beef market.
Yep.
And these are areas where we've not seen on some of these breaks, we've really not seen any yield. And we're left with the question of how far, or yielding rather, not just yield, but yielding in the cash market. And we've been left with the question on many of these breaks, how far can the futures get away from the actual cash market, and
Exactly right.
what is wagging here? Is the tail wagging the dog, or is the dog wagging the tail? And I think that the cash market and the box beef trade yet again will point out the direction post cattle on feed. And if we do get some cash market weakness or some beef trade weakness in tandem with this futures market weakness, then boy, we better sit up and pay attention. But if we don't, if the U.S. consumer continues to take on the consumption of this beef the way they have, I wonder how long you can have a correction under those circumstances.
Yeah, I completely agree. And noting those sell-offs of the past, right? They've been quick. They've sold off quickly to find, even in gap down situations, to find technical and other supportive areas. And then we're marching right back higher. And like Joe said, there's going to be that moment where at lows, you're sitting there scratching, you're like, cash is way up here. I'm down here on the futures. This don't make sense, right? And if there's a technical reason to be a buyer, you could set yourself up with a trade setup from that type of idea. But like Joe said, pay very close attention to the cash, because we do have some technical reasons and some price discovery happening in the futures that is signaling some weakness. And if the cash signals that weakness to, oh my goodness, right? You might be looking at all the stars aligning for a top. If it doesn't, you could be looking at an opportunity where the futures market has gotten too far away from the dog that wags it.
You know it. So
beautiful.
That sort of brings us to the market of the week. If we were a big budget operation, Dan, we'd have a graphic that said market of the week, right?
I'm assuming
all about it. Yeah. Well, so this is something we have not been able to give wheat away, right, for the longest time, and all we could talk about was how low can it go, and all of a sudden you open the week at 559 and a quarter in September wheat. The high's 594. Low of the week, 547 and a half. Last trade for today's session, 583 and a half. That's up a whopping 24 and a quarter in a market where the funds remain short about 80,000 contracts. They bought 11,000 contracts on Wednesday, and you're talking about dryness in Europe and too much moisture in your U.S. production area, right? And so what about wheat? If you're short 80,000 contracts yet, and they decide they have to cover that, and now the whole world is watching, where can that take us? I mean, this seems to be like the stage is set here, doesn't it?
What is it good for? Absolutely nothing.
There you go.
I do think the stage is set for higher wheat prices if we can get out over some of these technical indicators. I mean, you can chalk up some of the headline trading of heightened aggressions across the world. This is a reason why maybe wheat rallied a little bit here this week. But I think Joe was hitting the nail on the head. That's like, you just had a market that's been sold for so long. It's just at some point you run out of sellers, right? And I feel like wheat's finally hit that point to some extent. So how high can it go is going to be the $1 million question here. These short covering rallies, but if otherwise bear markets can be pretty impressive. But just taking a look at some of the technicals, we're closing above that trend line for the week. Didn't get out above that 200-day. I would have loved to have seen that. That would have been a nice snap. But hey, wheat's got to give you a reason to come back next week and pay attention.
Yeah, right.
It probably, test back to that 100-day around the 560 area is not out of the question. We had a little bit of resistance there over the last couple of weeks and coming into June that we clawed out above. I mean, but this looks like a good little reversal. I don't want to call it total cup and handle, but it has that kind of look, right? Like where you come down, you've rolled out of a bottom, and now you're starting to make these flagpole bull flags. That's how a market starts and can turn higher. I am cautious because I don't have much fundamental reason in terms of wheat stockpiles to be really, really, really worried about global wheat, but U.S. wheat, man. I mean, you've seen it. You've seen a lot of those pictures and boots on the ground in some places. There's a reason I think spring wheat kind of led the way, right? Here a couple days ago, really starting to come off of its lows, because it's been a tough harvest early, and now you're starting to see the pressures of an oversold market where you're getting some maybe a little bit of premium that needs to be built in.
And here again, the bias that we get from recent price action when we look back and use hindsight, right? So that move 4 days, 5 days ago on either one of these charts, wheat was down in an area where if you and I had looked, and maybe we did, we look at that and we say, oh, well, here we are again, failed
Here we go
attempt at a
again.
rally. Yep. Failed attempt at
Here
a
we
rally.
go again. Yep.
And all of a sudden you have some sort of international incident or further erosion of what's going on here domestically, certainly dryness in some sections of Russia as well on the fundamental side. But this looks like a chart where maybe folks were easing in to the idea of yet another leisurely trip to new lows in wheat. And all of a sudden they're caught by a change in circumstances. And now the question is do these circumstances allow for more action on the side of the fund manager who, at this moment in time, at those levels, if you're short, what did we call it? If you're short 80,000 contracts of wheat, you're in a bad spot.
Yeah.
Right?
No, you're hurting. And
how many of those 80,000 contracts are underwater?
Exactly. And back to that 200-day, you're almost at that line in the sand where your risk manager might come in and say, hey, dude, is the trend even down? Why are you short?
Right. Exactly right.
Those are real things and conversations that would be had.
And wheat has been the beneficiary of every time we get up here, some outside force, some fund trader participant comes in and sells these new highs or sells these breakouts, and back down we go. And so this is really, you're in an area here where the rubber is really meeting the road, and we're going to see, are they going to let wheat, is the circumstances in wheat going to cause these fund managers to continue to make a new decision that involves covering 80,000 contracts of wheat, from what I understand, and these numbers have to be fact checked. But I saw something this morning where they were saying that if you take all of the U.S. wheat futures and all of the European wheat futures, fund trading participants are short more wheat than will be grown.
Oh, wow. That's a terrible time to be short wheat.
Risk manager really wants to talk about that, right? And so now all of a sudden you are in a technical area where those folks should, just by very definition of the way that they trade, should be coming out of those short positions. And whether or not somebody takes discretion or the circumstances again favor this short side of the coin, it's going to be a very interesting 7 to 14 trading sessions from here on out, I bet.
I would agree. And I think that there's also an idea here that we have a bit of a failed auction to the downside, right? Wheat prices were selling off, found support. They found buyers here into the $5, $5.60 area. We then broke below, but we were unable to break below $5. We quickly came back up. Now we're back into this old range that we were in before. So just from a pure technical standpoint, I mean, wheat's you got to talk about how it has the option or the ability to move all the way back up in that range to that 640 area again. And then above there, now you're talking about that run to 7 and above. Yeah, these are levels that people are definitely paying attention to with this downward sloping trend line, the 100 and 200-day moving average. If you're short wheat, you're probably second guessing that position here into the end of the week if you haven't already covered.
Right. 11,000 contracts in 1 day's worth of trading session means to me that some of those well-heeled folks looked at what was going on and said, please just get us out. And they should all be doing that. And this type of price action, as we have seen before, my level of frustration with this kind of price action that flies in the face of the type of trading that the funds typically do makes you wonder, have they changed tactics, or have the times changed and allowed folks to just get that comfortable with these short positions? I'm not sure on any of that count. And I have grown rather agnostic about the direction of wheat over these many months where you see these breakouts just kind of stomped. But it would be rather satisfying to watch this one get some legs.
I'd love to see it,
going, right? Absolutely.
Love to see it. To see it. So I think that brings us to the question of the week, if Carter has obliged and provided us with one.
Question of the week says, if you are going to your half Ironman, what are you going to use as fuel? Now, no name brands here. We can't have Zaner Ag Hedge repping
So I use,
brand.
I use like a
Because
hydrogel.
I don't mean to cut you off, Dan, but more importantly, when I do something, when I get into an endurance situation, like maybe I just have to go, I have to get on my bicycle and ride not to the close liquor store, but to the one on the other side of town. You know, if I'm doing like double distance here, which could be like maybe 2.5 miles, like I might lean on a peanut butter and jelly sandwich or two to make sure that I'm fueled. And a lot of times when I'm at that type of endurance event where I see fellas out riding, racing to the second liquor store because they might be out of Bush Light Lime or Bush Light Apple at the first liquor store, or certainly some Bush Light in a corn can that I see from my perch here in this podcast room, I'll do a peanut butter and jelly sandwich. What do you think you'll be using for your not less, Dan? We're not going to say less, but I mean, I'm just half Ironman.
A little bit of an effort.
Yeah, it's whatever.
Effort.
Well,
Peanut butter jellies are a
use?
jam. They're definitely have always been a fuel. I usually keep some gummy bears around, but hydrogel actually is kind of my main goop. It's this powder. You put it in water, mix it up, 500 milliliters with it over an hour. It provides me with all the carbohydrates, salt, and everything else I need. It kind of feels like oatmeal in your stomach, so you don't feel full. And when you drink water, then the water doesn't slosh around in your stomach either.
And you don't get nauseous, right? Kind of cuts down on the nauseousness.
Correct. Some people might get nauseous because they're not used to the gel and like the goop. Like you can do it a couple times so that you like it, right? Some people don't like it, but it works great for me. I have no problem with it. It doesn't feel like any difference. In fact, I feel like I actually absorb water better because it coats like your entire insides with fiber, like a water soluble fiber. So yeah, there's a little bit of science there, but generally speaking, if I was just going to grab something, peanut butter and jelly sandwich, man, it's like perfect. It's like God created the ultimate fuel. I'm with you on that one.
But if you're out, and I would suppose for some of our listeners who might be out working in some of this heat at some endurance levels of effort and time,
sure.
it's hydrogel, right?
Hydrogels, right? You can find them. I don't want to say the name brand of the one I use that has no preservatives, no colors, no additives. But believe me, if you Google
Moritzen, is that what it is?
Yeah.
Moritzen?
Yeah. You'll find it out there. But but okay, to be fair, Gatorade has theirs. All of the brands have theirs, right? To not plug just one, but that's the one I enjoy and use, and it works really well for me.
But if I was going to be out on a farm and I had to be cranking for 12 hours, that's not a bad way to do it. You could fill up some water bottles and put them in
never thought about it that way, but genuinely speaking, anytime you need to go out for an endurance-like event where you need energy, you want to keep your blood sugar up and your salt levels up and stay hydrated well, that would work well. It'd probably work well for military applications too, for soldiers, or if you're going out for a ruck or something crazy. Yeah, it's kind of a super secret technology hack for nutrition plan for one of these types of endurance efforts.
That's pretty cool info.
And it's crazy. We only use it for like a race or for some technically a leisure activity. It's jokingly to call it that, but it's not work, right? It's not labor. It's I'm choosing to do this, but you're right. There's probably some really good applications out there for real hard, if you're getting outside and getting it going.
Man of a certain girth, such as myself, could lose actual pounds out there in the heat. Sure. You know what I mean? It's like a lot of that water comes out pretty quick. Yeah.
Dangerously.
Yeah, and being able to put it back in or keep it in while you're out there doing what you're doing. Now, the extent of my activities today, probably just a short ruck while I wear that sack while I'm mowing my lawn. But even then, the amount of water that a guy can lose, you know what I mean? So for you to be out there doing half Ironman in the 90s like that, that's really great information, I think. That's really great information.
It's survival.
All the best of luck to you. I hope that the day brings you some pretty cool, and I know you are the caliber of athlete.
Positive experience, right?
Right. You're the caliber of athlete to where if you do find yourself with a bit of a tailwind, you can really put up a number, can't you?
Yeah, I'm not. I don't think in the shape or the ability to do it this weekend, but definitely I've been known to stand on a podium or two.
We'll all be interested to hear how it goes next week.
Yeah, thanks, Joe. Well, thanks for listening to the Zaner MarketCast today. If you need more because you just can't get enough of us, you can follow us on Facebook at the Zaner Ag Hedge or on Twitter and LinkedIn at the Zaner Group. If you have a question you'd like answered on this show, there's a link for you to do it in the description. And you could just send us that along and follow the instructions and we'll get it answered here on the air. Thank you again, and be sure to like, comment, and follow the podcast to not skip a beat. And we'll be back with you as price action develops. Take care, everyone.